What's going on, everybody? Welcome back to the channel. This is Stock Talk David, and we are at Stock Talk Late Night episode 18. I appreciate everybody for tuning in, and everybody who's going to be watching later on the replay. If you can, just as you join, hit the like button, the share button. If you're not subscribed already, hit that subscription. And I really appreciate it, man. I really appreciate it. Help the channel grow. Still on a road to 1,000 subscribers, but I appreciate each and every one of you guys for tuning in and joining. Just appreciate it. Let me know where you guys are listening from. Let's see. Chat there. And we're going to jump right into it, see how these markets, we got a couple of topics we're going to touch on tonight. We're going to see where the stock market is going from here, or what do you think the market is going from here? We got the Trump potential U.S. involvement with Iran and Israel. Investors are bracing for the Fed signal, and then we'll look at a little bit of Tesla, see what's going on with Tesla and its stock price, and then we'll finish up with I'll jump into some dividends and some cover call income. If you didn't see my last video, I'll do a little recap of that. So without further ado, let's jump right into these markets and see where we stand right now. So let's jump right into it. We'll head over to Google Finance and let's just get a recap of the markets today. You see the S&P down, dipped below that 6,000. We finally got back to the 6,000, but we were down today 50 points. I'm sorry. Yeah, down today 50 points, 0.84%. Over the last week, though, the S&P is down 1%. Over the last month, pretty much even, up 19 points. And year to date, the S&P is up 1%. 1%, a lot less than what I expected, honestly. I was hoping that we would be well on our way to 7K halfway through the year, but here we are. We up 1%. Year to date, up 101 points, and we know we had a big dip, and we basically been fighting our way back since then. So, but yeah, the S&P is at 59.8272, up 1% year to date. On the day, was down 50 points. The Dow, see the Dow sitting at 42,215.80, down today. Basically 300 points over the last week, down 720. Year to date, the Dow is down 328 points year to date. Mind you, we are 6 months into the year and we are down year to date. Over the last year, though, still up 8% over the last year. And let's head over to the NASDAQ. NASDAQ down today 180 points over the last week, down 219 points. Year to date, the NASDAQ is up. The NASDAQ is up 1% year to date. So that's good that we see some green with the NASDAQ. Like I said, with the S&P and the NASDAQ, was hoping that we would be much further along 6 months into the year than, 1%. On the NASDAQ, and the S&P is year to date is up 1% as well. So yeah, basically flat on the year. But but we still have the back half of the year to go. Not sure which direction we're going in. It's a lot of moving pieces that's going on right now that we'll touch on that could affect the markets in the next few months. So me, I always root for a positive economy, positive stock market, but we shall see. It's getting kind of crazy out there right now. So hey, we just gotta stay in the game, and see how this thing is going to play out. But yeah, just want to do a quick recap of what the markets were, and to see where we at. Up 1% so far. The S&P year to date up 1% with the Nasdaq year to date. So, pretty much running even with the stock markets. And like I said, it's a lot of moving pieces going on right now. So we're gonna jump right into some headlines here. Let me know what you guys think about what's going on. Put a question in the chat here. Where do you think the market is heading with the tensions in the Middle East? Let's say which direction. Put that out there. Well, can I start it? So yeah, which direction do you think the market is heading with the tensions in the Middle East? And it's a lot going on. It's a lot going on, and let's jump into some headlines here. And you see here from CNBC, Trump weighs potential U.S. military strike on Iran, demands unconditional surrender. And you see some of the key points here. President Donald Trump is considering whether to launch a military strike against Iran. Current and former administration officials told NBC News. Trump warned Iran's leader. I don't want to, I don't want to butcher his name. That, basically he's an easy target, and our patience is wearing thin. And Trump demanded Tehran surrender its escalating conflict. Demanded that Tehran surrender in its escalating conflict with Israel. So when these headlines came out earlier today, you kind of saw a turn in the market, and the market kind of took a direction down, in the red. But these are the type of headlines and things that's going on day to day that could affect the market. So you got to kind of be in tune with what's going on, because this could affect the direction that it's heading. So I pose a question: which direction do you think the market is heading in? With these tensions, and I think more of the rhetoric intensifies. We could see quite a few red days. We could see some red days, I think, in the market. Eventually, depending on if there's any involvement with, by the U.S., we may, it may settle down. The market may settle down, but right now, you're going to see some effect based upon what's going on, in the Middle East. So, not surprising. But we'll keep an eye on that. Let's just jump into another headline here, because we got some big news as far as the Fed. The Fed's going to be talking soon, tomorrow. So we got to be in tune with what's going on with the Fed. That's another major key that could affect, the direction of the market. So let's see what we have here in Yahoo Finance. Let me see here. Actually, I don't. I got the Tesla headline up. But here we go. Investors brace for Fed signal on 2025 rate cuts. Let's see what this article is talking about here. Investors and Trump are about to find out if the Fed still wants rate cuts in 2025. We'll read a little bit here. Federal Reserve is widely expected to hold interest rates steady at its meeting this week, but investors will be watching for something else. Whether central bank policymakers are still committed to 2 rate cuts this year. The Fed's latest round of projections released Wednesday will include the much-studied dot plot, which is a chart updated quarterly that shows each Fed's official's prediction about the direction of the central bank's benchmark interest rates. The last dot plot, released in March, revealed a consensus among Fed officials for 2 cuts this year as some are already factoring the uncertainties of President Trump's economic policies into their projections. They made the same prediction last December. So we'll stop it right there. And yeah, that's going to be something to look out for tomorrow to see. And investors will be tuned in. Tune out, I hope they kind of stay the course of what they originally thought. What they feel is best for the policy or what's going on in the market. No rash decisions right now. So yeah, that's it, man. That's it for that. And then one last thing I wanted to touch on, and I think it's a little bit of Tesla. And if you want to pull up, let's see, it's acting a little weird right now. It's Yahoo Finance. I want to pull up my article. Nope. That's okay. We'll go back to it later. What's going on, Lisa? But so yeah, we have Trump, Iran, Israel weighing big on the market. We have the Feds coming, with their talk tomorrow. So those are two key factors that could weigh heavily on the market and which direction it's going to go. So, but yeah. So we'll see. We'll see. And I think the direction of the market depends on really those two big headlines right now. The Iran Israel issue and the rate cuts. Are they going to stick to plan, or we're going to go in a different direction as far as interest rate cuts for 2025? So I will say that I am glad that the market, even though we're only up 1% on the S&P, we're only up 1% on the Nasdaq year to date. I am glad that it did rebound from the earlier crashes we saw, earlier this year. So I hope those, who stuck around in the market were able to pick up more shares if possible to kind of ride the market back up. I didn't panic, but I did have an uneasy feeling, and I still have an uneasy feeling based on what's going on in the market right now. So I hope that we're able to. I hope nothing really pops off from the U.S. standpoint, man. The Middle East is kind of crazy. I hate when we kind of get involved in that stuff. It's just crazy. It's just crazy. So Lisa said, first I was a day early, and now I'm late. Hey, I know it's late for you, Lisa. I know it's late. So he said, yes, I buy the dip. Yeah, I didn't get too crazy, but I did. I was buying. Consistently when the market was down. So if you've been in it long term, a few years, you've seen ups and downs in the market, and you always see the market find its way to come back up. So the smart thing to do is continue to buy when the market is down, and try to hold on. If you have good solid positions, you want to hold on to those shares and add to those shares when you see the market is down. So I did the same thing. So hopefully that return. I haven't made it back to my portfolio all-time highs yet, but I think that as long as the market hopefully continues to go up, that I'll be able to shoot past those market highs. So those portfolio highs. So but yeah, man, yeah. So what standouts do you have in your portfolio? What positions right now, Lisa, do you have in your portfolio that's kind of I wouldn't say carrying the weight, but been kind of overperforming for you? Anything in your portfolio? I can say in mine, it's probably been I've been really impressed with gold, which is my GLD position. Um, I should have held on to my silver. I'm actually going to buy that silver back into another portfolio. But the gold GLD has been doing really well for me. What else is doing well? I've had some yield maxes that's doing well. I don't want to talk too much about the yield max, but my AMZY is up like 40 something percent. on the share price. I bought it at $11 and it's up to like $16 right now, and I'm getting crazy dividends each month. So I've been really impressed with that. What else? What else is doing really well for me? Um, Google starting to rebound just a little bit. Um, what's doing well? Actually, let me pull up. I'm not gonna put it on the screen, but I can pull it off to the side. I'm gonna pull up my Fidelity account here, and let me just see what positions have been doing pretty good for me overall. And let me see. Oh, a sleeping giant, BRKB. You know, that's the Berkshire B position. I am up. I am up overall 34% on my BRKB. I had a cost basis of $359, and Berkshire B is currently trading at 483. So I've been excited about that position. My SMH position is up 49%. Cost base of $175, and SMH is trading right now at 261. You know, that's the semiconductor ETF. What else is doing really well for me? SPY. At least I know you don't like it. I know you're not a big fan of those of those fees, but SPY has done well for me, up 29%. I was buying it. I have a cost basis on SPY of $461. SPY is currently trading at $597.53. So that's done really well for me. Lisa says Meta, Nvidia. Let me look. Man, you know what? Still one of my regrets is that I sold my Meta position, I think back in 2022, because I thought I was overweighted in tech. I did buy back into Meta, just not nearly as much. But let me see how my Meta position is doing. And it's a very small position. But my Meta is, I actually have Meta and Nvidia in the same portfolio. My Meta is up 74%. I just don't have a lot of it, right? My Meta, I have a cost basis of $399.21. Meta is currently trading at $697. Nvidia, my Nvidia position is up 76%. I have a cost basis of $81.77. Nvidia is trading at $144.12. So yeah, Meta Nvidia is doing really well. Let me check my son's Meta position, because his Meta position he's been holding for a long time. And just catch this, right? I didn't sell my son's Meta position. He's been holding it for years. His Meta position is up. His Meta position is up 508%. And he has a few shares of Meta, right? This is why you hold long term. His cost basis in Meta is $114.57. Meta is currently trading at $697.23. That's in my son's account. That's the benefit of holding long term. So yeah, man, he's been having Meta for years. What else are we up big time on? Those are two that just stand out. My FX AIX position. I have a lot in my 401k. I don't have quite a bit in my regular portfolio, but I am up 18% on that position. What else? A couple of sleepers here I want to talk about. Well, this is not my Microsoft. Microsoft is not a sleeper, but I'm up 114% on my Microsoft position. Cost base is $222.65. Microsoft is currently trading at $478.04 right now. Eli Lilly, I'm up 53% on my Eli Lilly. Cost base is $515.63. Eli Lilly is currently trading at $515.63. Eli Lilly is currently trading at $791.24. So quite a few positions, just holding long term, being patient, and just allowing those solid positions or good positions to just work for you long term. And that's the great thing about being a long term investor. So um, I- another position in my son's account that he's held for years is PWB. PWB. Let me take a look at PWB here. And I'm gonna just pull it up on the screen here. And just give me 1 second. PWB, which is an Invesco Large Cap Growth ETF, trading at $112.09. Right. I already know how much he's up, but let's just take a look. Year to date up 10%. Let's look over the last 5 years. And you see up 107%. And in my son's portfolio, he's been holding this ETF for a long time. He's up. It's crazy, right? He's up 587% on his PWB position. He has a cost basis of $16.31. PWB is currently traded at $112. So his top two performing positions is Meta. He's up 508%. PWB, he's up 587%. Some other positions, right? I bought Shopify for him when Shopify split. I bought 10 shares for him at $35.24. Shopify's trading at $106.53. I'm mad because I had Shopify too, and I sold out of mine, but I kept it in his account. He's up 202%. Costco, he's up 169%. Cisco is up 120%. And these are positions that we bought, and we add to them a little bit, but we just let them sit in his account and just let them grow over time. So, yeah, man, let's see. Lisa, my daughter's up 66% on Tesla at one point. We were both up over 100%, but I'm holding on. Yeah, I bought some Tesla today on a pullback. You're doing better than me on my Tesla position. I had more Tesla, but I sold it a while. I sold some a while back. But my current Tesla position, I am up 19%. I have a cost base of $265. Tesla's currently trading at $316, so I'm up 19%. Let me see what my son is up on his Tesla position. Very small positions. He's up 18% on his Tesla position. So cost base at 267. Like I said, it's trading at 316. So yep. So, but yeah, buy and hold long term is the way to go, and that's the key. That's the key to building your wealth, growing your portfolios over time. Is just holding long term and let these portfolios do what they're supposed to do. So let's see what else. Of course, my two best performing positions in my portfolio that I've been holding for quite some time. Of course, Amazon, I'm up 639% on my Amazon position. But also, is one of the first stocks I really put a lot of money into. I've been holding for quite some time now. We have a cost basis of Amazon of $29.06. Amazon's currently trading at $214.82. I do have over 100 shares of Amazon, so I do sell cover calls on Amazon as well. Google, I'm up 475%. I do have over 100 shares of Google. Cost basis of $30.80. Google's trading at $177.23. And then another that's doing quite well for me, I've been holding for a long time, is Apple, up 91%. Cost basis of $102.34. Apple's currently trading at $195.64. So I do have over 100 shares of Apple as well. So Amazon, Google, Apple, Those are my top three mainly, and then on top of that, I'm able to sell cover calls on those as well. So they've done really well in the portfolio, and Apple and Google pay dividends, and I'm able to sell cover calls. So you're kind of hitting it three different ways, right? You With increased share price, you are also getting dividends from Apple and Google, and I'm able to sell cover calls. So it's profit in three ways with those two positions here. And I want to jump into I did a video on it, but I do want to jump into the cover calls, um, because that's just been an instrumental point of income that I'm glad I've learned that ability to trade to sell cover calls, because it's just adding more income to my uh, portfolio, really. So give me 1 second here. Let me sign out of this Fidelity, and we'll jump over to let's cover calls here. Let's see what we got here. So here, cover call income year to date, 3,889.76. So you see here, we've made $1,100 from Apple, $1,100 from Google, and $1,500 from Amazon so far, 2025. And so, man, my cover call income is probably going to catch up to my dividend income, and they're running neck and neck so far. We're up to 8,271.01 between the two total. So you see here, Apple cover calls. We started off in January with $101, then $87 in February, March 166, April 647. Big month for Apple cover calls in April, but I had to roll it out for playing defense, so I wasn't able to collect any May income, but you got to be patient, right? So I was able to roll down some cover calls for Apple yesterday, when we made $149.64. So grand total for Apple, like I said, $1,152.96 of Apple cover call income so far in 2025. So side income, right? Side income. And then we go over to Google. So far this year, 1189.13. Got off to a slow start, right? We had to play defense. We had to buy back some cover calls, some negative 37.39, negative 49.40. But then March, we turned it around. Was able to profit 112.64, April 135.22, May 257.86, and June, big month in June for Google cover call income, $770.20. So nice bounce back for Google, and it's right in the mix now. And then we go to Amazon. So far year to date, $1,547.67 in Amazon cover call income. Got off to a slow start, $80 in January, $49 in February, March $180, but we started to pick it up in April, $402.44. May was kind of quiet, excuse me, kind of quiet, but look in June so far, $694 in cover call income from Amazon. So, I'm just excited that I was able to learn this skill set of trading or selling cover calls, because it's really taking my income to another level, and to be going neck and neck with my dividend income is great. It's great. So like I said, so far year to date, $8,271.01 between the dividend income and cover call income. So we're looking to increase the dividend income as we reinvest more shares, reinvest the dividend income and add more shares. I'm telling you, the dividend income, let me see here. Let me see where we at for the month. We're about halfway through the month of June, and we're at $608.05. You know, we had $944 last month in dividend income, and I think we should end up this month around the $800 range. Still have 2 weeks to go in the month, and I think by the time August, September comes, we may be ready to cross over that $1,000 a month threshold in dividend income. And once that happens, that's going to open up the floodgates for a lot of things, right? With the dividend income and our cover call income is picking up, it's going to open up some big floodgates as far as that extra income that we're going to have flowing through the account, just from the stock market and from owning dividend producing shares, and selling covered calls. So it's like I said, man, it's a matter of time. It takes a lot of patience. It takes a lot of discipline, but I'm glad I'm able to document the journey, because once those floodgates open up, we're going to go to another level. I truly think we can come close to hitting $20,000 in dividend and cover call income before the year is over. Right, we're sitting at 8,000 right now, and we're starting to pick up steam. This is a big month for cover call income. I think we can get close to the $20,000 mark as far as dividend income and cover call income before the year is out. So, man, it's just, I remember where I was only getting $20, $30 a month in dividend income, and we're going to reach $1,000 real soon, real soon. So, it's starting to come together. And I remember probably a year or two ago when I first started selling cover calls, I didn't know what I was doing. I was taking more losses than gaining premium. Um, and I kind of was second guessing myself. Maybe this cover call thing is not for me. But once I just kind of start studying a little bit more, learning when to sell cover calls, learning when to roll it out, and kind of play defense when I had to play defense. It's the pieces of the puzzle are starting to come and line up. So, it's coming together. It's coming together, man. The cover call income is it's really exceeding my expectations. So, and you get good premiums on stocks like Amazon, Google, and Apple, right? So 100 shares of those is a lot different between than 100 shares of a stock that doesn't really move like that or gain the premium. You're not going to have the same type of success. But 100 shares of Tesla or Amazon or Palantir or Microsoft or something like that, man, they're going to have those big premiums where I see why people can live off of cover call income. It's it's legit, right? So just think, if I had 200-300 shares of each, I can do multiple contracts, man, that income would be crazy, right? So, and maybe that's a 5-year goal to get to 200 shares of Apple or 200 shares of Amazon or Google, or things like that, man. That can really take this thing to the next level. But we're going to keep slow walking this thing. Like I said, I think by August or September, unless something crazy happens in the market, which something crazy can happen, I think we'll be hitting $1,000 of dividend income um, by August or September. Right. One of my positions, just from reinvesting, we bought like 8 or 9 shares last month just from reinvesting. You know what I mean? It's quite a few positions where I get like 3 or 4 shares just from reinvesting. So, that snowball starting to get bigger, starting to get bigger, 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 bigger. And, soon it's going to be market proof, right? Even when the market is down, you're going to have the big incomes. But, we take the good and the bad right now. Going back over here, we're ahead of our pace from last year, which was a good thing. Um, like I said, we're at $608.05 of dividend income for June, with about 2 weeks to go. June 2024, we had $726.47 for the whole month, and we're already at 608.05 with 2 weeks to go. So we're still expecting quite a bit of income before the end of the month. So last month we had 944.22, which in May 2024 we had 775.98. So that was a big increase, right? And I had a dividend goal of 12,000. I'm gonna keep it at 12,000. So we still have about 7,600 or $7,600 more to go to reach that $12,000 dividend goal. But like I said, I think we're going to start touching that thousand in around August, September, and October. November. We're going to finish the year out strong. I got that feeling. I'm speaking into existence right now. I haven't had $1,000 a month in dividend income yet, but it's coming. And now that we're able to get $1,000 in cover call income for a month, we've done that twice, right? We've done it in April 1185. We've done it in June 16. So far 16-14 already. We still have 2 weeks to go. I may be able to, something may happen, I may be able to get some more income and cover calls before the month is over with. So if we coming in around $2,000 a month, once we hit our groove, $2,000, $2,500 a month in dividend income and cover call income, man, that could change. That can change some things. You know what I'm saying? That can change some money situations, right? And that's side income. It's not counting my regular job or anything like that. So, yeah, man, it's a matter of time. It's a matter of time. Appreciate it, Jay. Yeah. So it's a lot of hard work and it's a lot of patience. It's a lot of patience that comes along with this. It's not going to happen overnight. It's not going to happen overnight. And I'm still learning how to trade calls and puts and things like that. I'm still learning that process, so that's in the works too. So once I get my groove, which I still have my ups and downs, I still it's still a discipline thing for me. Once I'm able to play with multiple contracts with that and start to get my timing with that, that's going to open things up even more. But I understand it's a process, especially on the mental side of it. It's a process, for me, with the day trading and stuff like that, which I only do maybe 2 days out the week when I work from home. I'm able to go in and place a couple of day trades. So it's not an everyday thing for me. So it's just a learning process with the charts and, getting that under control. So, but I'm going to get there. I'm a long way from where I was this time last year. So I'm heading in the right direction. And for some people, the trading can click. You can watch a video and boom, it just clicks. Well, for me, it takes a little bit longer, but once I get it, then I got it. You know what I mean? So it's coming. It's coming though. It's coming. But man, I'm super excited about this cover call income, man. And I'm telling you, if I can ever get Microsoft to do a stock split, because if I can get 100 shares of Microsoft, that'd be crazy. But I got to figure out what's the next stock that I can get 100 shares to. It's I put a lot of time in getting Apple to 100 shares. I wish SCHD provided some good premiums because I would sell cover calls on SCHD, but I haven't liked what I saw with the premiums out there. So I just, I didn't want to force it. I heard Sophie has good premiums. I had 100 shares of Sophie at one point, but I don't have any Sophie right now. I was thinking about adding it back to the portfolio, but it's one that I'm watching. Yeah, man, that's where we going with that, man. I'm about flipping these stocks to make money however way I can. So at least I'm at 59 on Apple. Yeah, keep pushing. Like I said, I had 12 shares of Apple before they did a stock split, and I think it was 12 or 13. I can't remember exactly what it was. And then when they did a stock split, that pushed me to 70 something shares, and I was like, you know what? I got to get to 100. I got to get to 100 shares somehow, and then that's what I just focus on probably for the next 2 years to try to get to 100 shares of Apple. And I finally got there last year. And then now we've, like I said, now we're getting that cover call income. Um, so the Apple prices perform well for me. It plays a dividend, and we can sell cover calls on it. That's Apple and Google. I wish Amazon paid a dividend, but it's okay. It's okay. And just think, right? Um, 55 SCHD. Yeah, man, keep building. It's a good time to keep building the SCHD while that price is where it's at. And I'm just thinking if Amazon or Google or Apple ever do another stock split, I don't care if it's 3-1, 4-1, you know, and that pushed me to 400 shares, man, that cover call income is gonna be crazy because then I can do multiple contracts. I can do 2, 3, 4 contracts depending on what type of stock split it does. It may not. It may be 2 or 3 years, 4 years down the road. Maybe once it gets to $400 or $500 a share, maybe. But I'm telling you, if it ever does one of those stock splits again, you know, it's gonna be. We will probably won't see a 20-1 split like we saw, but give me a 5-1 split or something like that, and yeah, it's gonna be crazy. Say invested $300 last month in SCHD. Yeah, man, I got to pick up my SCHD as well. That was one that I did a challenge on to get to 100 shares, and I kind of slacked off. Um, but where am I at? I didn't. I'm not sure if I updated my SCHD position lately as far as on the spreadsheet. Um, or maybe I did. So my SCHD position, I think this is accurate. I'm at 112 shares of SCHD, and you see here I kept a running total from after it split. What did it do? A 3-1 split? I think it did a 3-1 split, and then SCHD did a 4-1 split. So, but anyway, SCHD after the split, I had 92 shares, and then that's why I started the tracker. And ever since then, I've invested into SCHD and SCHG, $808. I've been able to I've added 20 shares of SCHD since it split. So now I'm at 112 shares. Short term goal is to get to 115 shares. So yeah. So we're sitting at 112 shares of SCHD. So, but I haven't been investing like I was when it first quit. I was buying like a share each week, as you see over here. But then I kind of slacked off once I got to 100 shares, so I can focus on some other positions. But SCHD is still in the it's still up there. It's still up there for sure. But what people were investing in SCHD because of the dividend growth. I think SCHD should get a lot of credit for the expansion of some of these new dividend paying ETFs, right? I think they're kind of jumping off the back. So I think they saw how popular SCHD was and why people was jumping into SCHD for the dividend growth. And now you're seeing these monthly pairs, right? SPYI, you're seeing QQQI, you're seeing some of those ETFs that are also holding their share price but paying solid, like really good monthly paying dividends, right? A lot better than honestly than SCHD. You know what I mean? Just not as popular as yet, but I'm telling you, SPYI, I'm not a financial advisor, but SPYI, QQQI, man, I'm telling you, even FEPI, those are three off the top of my head that are just they're knocking it out the park right now, and with their dividend payouts. So, and they're holding and they're performing with the share price as well. So, but like I said, I give a lot of credit to SCHD because I think SCHD kind of birthed a lot of those what you're seeing now. Now you have weekly paying ETFs, and I think I'm gonna start a weekly paying dividend portfolio. I'm not sure. I think I am. I think I am. I'm gonna start a weekly paying dividend portfolio in the next few days. It's probably gonna have about 4 or 5 positions. Throw a little money at it, and then see where it goes from there. I'm not going to treat it like my normal portfolio where I have the S&P 500, I have growth, and I have income. That's usually how I build a portfolio. S&P, growth, whether it's NASDAQ or tech, and then income, a dividend paying position, usually about 40% S&P, 40% growth, 20% income, or something like that. Or maybe 50-30-20 or 50-40 10 or something like that with the S&P and S&P growth and then the income. So if you don't mind, why would you invest in a SPY over SPLG or VOO? It depends on the portfolio, right? So just going to be honest with you, I have the SPY, I have SPLG, and I have VOO. So I have all three in separate portfolios. So when I say the S&P, that's just me kind of that's just like I have QQQ in one portfolio, then I have QQQM in another portfolio because I wanted to have tech in that portfolio. So that's just how I build it out, right? Long as it's the S&P, long as it's tech or growth, and long as it's income. So however I build up those three positions, you know, that's how I build it out. Now it's not now if I just had one portfolio and if I had to choose SPY or SPLG or VOO, I'll probably go SPLG or SPYG, one of those two over VOO because I had VOO and I sold it and I bought SPLG and then I got back in VOO in a smaller position. So it's just based on what type of how I want to do that particular portfolio. Long as it's the S&P, I'm fine with it. But like I said, I have a portfolio that has the SPY in it. I have a portfolio that has SPLG in it. I have a portfolio that has VOO in it, right? And my son has VOO in his portfolio for the S&P. So that's just me. Like I have a few portfolios. That's all. So I just gotta find. For me, I just gotta find a way to put the S&P in that portfolio. I gotta find a way to put growth in their portfolio, whether it's tech, QQQQ, or Nasdaq. I gotta find a way to put one of those positions in the portfolio, right? And I gotta find a way to put income in the portfolio. So that may be JEPQ in one portfolio, it may be SPY in another portfolio, it may be QQQI in another portfolio. So that's just how so I won't it's not really one over the other. It's just how that particular portfolio is built out. So yeah. Let's see what else we got. Give me something. What are you guys investing in? What's a hot position or a hot stock that you have on your radar right now? Anything we need to be on the lookout for? Let's see here. I'll jump back into my Fidelity account here. So yeah, SPLG. What do I have that at? Do I have? Yep. So yeah, I have my SPLG. Yep. Like in my biggest portfolio, I have Amazon, Google, Apple, JEPQ, Tesla, SPLG, and AMZY. So you see a lot of tech, you see the S&P 500, and you see income, right? And that's the portfolio I also sell cover calls in. So you see Amazon, Google, Apple, JEPQ, Tesla, SPLG, AMZY. So that's the strategy. S&P, tech, and income. But because that's one of my first portfolios, I am more heavily invested in tech in that portfolio because Amazon, Google, and Apple were like three of the first positions I really ever bought with when I first got a decent amount of money. So small position of Court, Microsoft, and Meta. Yeah, man, I'm telling you, man, I just wish I kept all my Meta position. I think I had like I think I had like 18 shares of Meta before I sold it. Oh my god. Oh man. I'm just thinking about that now. And I wanted to get some S&P. I think I sold my Meta to buy some VOO, and I ended up selling the VOO to get SPLG. I think that's how, if I remember correctly, that's how I did it in that portfolio. Yeah. So mm, I'll be focusing on Maine. Yeah, I'm that's one portfolio I can share. Let's share that. I do share my Robinhood portfolio. So let me log out of here. Let me pull up my Robinhood portfolio to see what we looking at right now. And see if I can pull it up. See where we stand here. Got to be a little transparent, right? So I don't show you all my Fidelity positions, but I'll show you my Robinhood position here, and that's where I have my main total at. So let's see if we can stop sharing here, and let's see if we can pull up the Robinhood portfolio. Haven't looked at that in a while. So you see here, oh, I don't want that. So we're at, and this is a live portfolio because it does have crypto in it. So you're going to see it changing. But we were down today, 1%. And you see we're at 75.80, 75.80 in this portfolio. Over the past week, we were down 2%. Over the past month, though, we're up 1%. Year to date, we are down 4%. Of course, this market, man, has just been crazy. And over the last year, we're pretty much even. We're pretty much even. Trying to get this portfolio to about 8 to 9K before the year is out, but I just need some act right, man, in the White House. But it's all good. Let's see what we got over here. You see, we got some Bitcoin here. We got some Ethereum. We have some Doge still. We do have one Leap option in ET. That's for January 2027. In our regular stocks, we have some ET. We have 77 shares of ET. We have some VTI here. We're up to 5 shares of VTI. We're up to 4 shares of QQQM. So, and our main position, we have 19.51 shares. So here, right, we have VTI, which is not the S&P, but the total stock market. We have our tech, QQQM. We have our income with Maine. And then we added, energy with ET. Then we have our crypto position. So a small portfolio, but I like it. We're building up our VTI. We're investing in VTI every week. We are investing. So we do it. Yeah, I think we do $10 in the VTI every week, and then we rotate $10 between the other 3 positions: QQQM, Maine, and ET. So I think we bought QQQM this week. So next week we'll probably buy some Maine with that $10, and then I think we buy Bitcoin every week now. And I think that's about it. In this portfolio. Maine, we should have some dividends coming up. Let's see if Robinhood will let us know. I think it's gonna let us know. Maybe not. I thought we had a dividend. We have actually 2 dividends, I think, for Maine this month. Yeah, there we go. Let's pull this up here. Oh, so this happened this yesterday. Your $4.86 dividend reinvestment for Maine in your individual account is complete. You receive 0.08345 shares at an average price of 58.24 per share. So we received that Maine dividend yesterday. It was reinvested, and I think we're going to receive a special dividend in Maine as well at the end of the month. And you see, Maine is trading at $57.58. We have an average cost basis of $43.66. So we are up 31% on this position. Not bad, not bad at all. And you see, it has about 14%, portfolio diversity. So yeah, man, I'm a big fan of Maine. Maine has done really well for me, and I wish I had more shares, but we'll continue to build it up slowly but surely. But yeah, yep, yep. What's your goal for Maine, Lisa? You say you want to be focusing on it lately. What's your goal? How many shares you're trying to get to in Maine, or how much you're trying to invest in it each month? And anybody else have Robinhood? Like I said, I'm Fidelity is my main account, but I have a Robinhood account. I trade in. I have a account in Webull, account in Moomoo, Charles Schwab, and E Trade. So I'm kind of I'm kind of spread out on these platforms. But I favor Fidelity. I favor Robinhood. I like being able to buy partial shares. Some of these platforms are a little bit tricky as far as letting you buy partial shares. So yep. So, man, what else, man? We've been on for about an hour now. It's been a while since we done stopped and chit chatted. Well, I appreciate everybody tuning in, man. If you don't mind, hit the like button and the share button and the subscribe. I really appreciate it. I'm still trying to get to 1,000 subscribers, but hey, it's okay. As long as we bring in some information and staying consistent, we'll be fine. We'll be fine. We'll be fine. What else we got going? Let's take a look at our Bitcoin position. Bitcoin trading at 105, 105,000. See, our average cost is 50,000. We are up 109% on our Bitcoin position. I'm not mad at that at all. You see, we're doing just a weekly buy right now in the Bitcoin. We may increase that, but right now we just throwing in $5 a week into it, and let it do what it do. But to be up 109% with an average cost basis of 50,000, I think that's pretty solid. Pretty solid. Wish I just had more into it. And I don't know. I was thinking about selling out of my Ethereum and Doge and just dump it all into Bitcoin. What y'all think? What y'all think about that? What y'all think about that? Sell out your Ethereum and put it all in the Bitcoin. So you close my M1 account. I never had an M1 account, so I'm not familiar with it. You say main goal right now is to get to 50 shares. Okay, cool. Yeah, I need to pick up mine. So like I said, I'm at 19 shares, and then I need to join your Discord. Actually, yeah, I need to join your Discord. Yeah. So cool. You said I still have Public, Moomoo, and Webull. Okay, cool. I don't know. I don't think I'm not familiar with Public though. I'm not familiar with Public. Yep, trying to get there. We'll get there one day. We'll get there. But I remember starting from scratch. We had about 828, I think, subscribers. So it's different strokes, different journey for different people, and it's okay. I'll be big time one day. But these videos, man, they help me out more than just for subscribers, man. And, it helps with being comfortable talking in front of a group of people, and that's kind of been my main reason why I make these videos, to talk about investing, and then just to get comfortable talking in front of a group of people, even though it's online. Um, it just helps your public speaking, and I think it's done wonders for me since I've started making these videos a couple of years ago. So, yeah. I wish you would have done that last year. Done what? Done what? The Discord. Uh, yeah, man. Like I said, man, appreciate you guys tuning in. It's getting kind of late. I know people got to get up and go to work, and I'll probably be working from home tomorrow, which is a good thing. So that's why I'm staying a little late tonight. Um, but yeah, I had a good day. Hey, that's what's up. That's what's up. That's what I need. I need one of those type of day. I need a viral video, a viral short to kind of, um, you know, my biggest video was a sports video, actually, a sports short video that I just uploaded, and that's kind of what helped jump the channel off. To be honest with you, it didn't even have nothing to do with investing. So um, I have a few sports videos, and you have to go way back, but most of the content on the page has been for investing. So. But yeah. But I think we're gonna shut it down tonight. I appreciate y'all tuning in. Remember to hit the like button, and share, subscribe. I really appreciate it. I'm not a financial advisor. Just like to come on and talk stocks. And man, and just if I gave any advice, is just to stay invested, focus on picking the right companies, right stocks, and come up with a plan of how you want your portfolio to look. And you can have more than one portfolio once you get comfortable. Don't think you need to have one huge portfolio. Maybe you need to break it down into a few smaller portfolios that allow you to manage it a little better. So that's like what I'm saying when I say S&P growth income. That's my strategy. S&P growth income. I can do that with 3 positions. I can do it with 6 positions. I can do it with 8 or 9 positions. I try not to go more than 8 or 9, 10 positions to a portfolio now. Probably 8 is like my sweet spot now, which I've learned over time. I used to have 10, 15 positions, but no, 6, 7, 8 positions in a portfolio is like my sweet spot. So, but yeah, so just, develop your own strategy, man, and just try to perfect that strategy is the advice that I would give. So, but hey, until next time, I will talk to you later.